I was working in a homeless shelter. The one thing that stuck with me was a guy that I knew, and he said, "Why don't you grab a couple of your buddies and go flip a house?" This would be great if I could get one of these properties for each of my daughters and use that as the educational savings plan. We started realizing, you know what, like this could probably be done as a business. Real estate has become something that I get up for every day. I look forward to, and it's what gets me going. So.
Hey guys, this is Marcin Droz. Welcome to another M1 member highlight. I have with me here Drew Toth. Drew is the CEO of Elevate Living. Drew, welcome to the show.
Hey, Marcin, thanks for having me on today. It's been awesome to get you to know you a bit and a few of the members since the time we've been involved. So happy to be on here chatting today. So.
Cool. Yeah, I love talking to somebody, and I mean we're gonna get into this. I love talking to people that are lifelong serial entrepreneurs, business owners, and we'll kind of talk about your journey because it's interesting. A lot of people see real estate as maybe a tool to financial freedom or transitioning out of their 9 to 5, but for somebody like you, it seems like it's kind of been a common theme all throughout your life. Actually, before we dive into it, Drew, maybe give us a little bit of your background. For those of you who are watching the video, you can see there's a bike hanging in the background. You've got all kinds of stuff going on. Tell the audience a little bit about yourself, if you don't mind.
Yeah, no, that would be great. I'll share a little bit about my story. So it's interesting that you talk about how a lot of people enter real estate, as a tool, for freedom to achieve something. And that was no different for me starting in real estate as well. I never saw it as, this is going to be my full-time business. I found myself in a situation, I was working in a homeless shelter. I loved what I did. And I ended up becoming a single dad of my three daughters at the time. One was 6 months, 4 and 6 years old. And so the question that was sort of, plaguing me was, okay, I love what I do, but I don't want my girls to have a different, opportunity, loss because of the situation that we found ourselves in. And so I was trying to strategize, how do I save, to contribute to my daughter's education? And so I approached a few people that I respected from a financial wisdom standpoint, and I got different, advice. Actually, one guy was like, "Hey, why don't you, run a fundraising event?" And I thought, not that doesn't really sound good to me. There's lots of good causes. It wasn't that my daughters weren't, a good cause, and I had different forms of advice. But the one thing that stuck with me was a guy that I knew, and he said, "Drew, you're young. Your dad has some trade knowledge. You can swing a hammer. Why don't you grab a couple of your buddies and go flip a house?" And I thought, you know what? That's something that I can get into. And so we ended up finding a beat up duplex on St. George Street in St. Catharines, where I was living. It was a seller that just had done with the property. He actually had his ex son-in-law living in the house and the sister, and so he was done with it. So we purchased it. We ended up renovating it, refinancing it, and hold on to it. And I thought, you know what? This would be great if I could get one of these properties for each of my daughters and use that as the educational savings plan. And so that's what we ended up doing. And anyways, long story short, things progressed, and we started realizing, you know what, like this could probably be done as a business. And so what was happening at the time as well is I was starting to feel a bit of real burnout in my position, right? I was working on the front lines of mental health and addictions, and after 7 years in that, I realized, you know what, it was time for some change. And
Right.
so that's sort of what propelled me into it, and ended up being a full-time business. And you said, guys like me, I mean, now, this is what I wake up for every day, and I love it. I love the business. It's something I'm going to be doing for a long time, and for sure there is a financial goal, but it's also just a passion. Like real estate has become something that I get up for every day. I look forward to, and it's what gets me going. So.
Yeah. Well, and the mental health work that you did for, I didn't realize it was for 7 years. That's quite that That's that is a workload. I mean, I have family who works in mental health too, and it's God's work. It's definitely necessary. So that transition that you went through, and how many years ago was it that you did your first deal?
So I would be 15 years now. Yeah.
15 years ago. Okay, so maybe a book title for you is 15 years to nine figures, because I mean, I looked at your CV. I mean, you guys have done over $100 million in deals now, right? So it's been quite a journey. And for anybody listening or watching, as I'm going to get into with you, Drew, here, I want to maybe talk about maybe the first deal, that transition point where you realized you had a scalable business, and then at what point and where you are now, and I guess where you're going with that scalable business. So tell us a little bit about that first deal, that first swing into the hammer. What did that look like?
So, I mean, it was definitely a lot of learnings, while it was happening. So we purchased this duplex, and there was a distressed seller. I would say he was just so done with the property, and we looked at it and said, okay, originally, like I said, the mention was to flip, but we transitioned the strategy because we realized one of the things that was a surprise on that deal that I missed was there was a part in the foundation that actually was causing a leak. So one of the learnings, me and my buddy, I'll never forget, we were, shoveling out the side of the property into the wee hours. It was like 11 o'clock. We did the excavation. We had a guy come in and tar it and repair it. So that was, definitely a surprise that we were able to work through. But that was the first deal. And then the second deal was similar. We bought a duplex that had a third unit, and we were able to legalize the third unit in the basement through a permitting process and also doing some fire rating. And that one was also we ended up doing, being able to refinance and pull out of that. And it was interesting, like one of the key things after that second project was a buddy of mine that was a contractor. He was running a junk removal service and a painting company at the same time. And I actually met him in the homeless shelter. He was a volunteer there, and we got chatting and realized, he had started, doing some real estate. And his experience was his student rental had actually increased his net worth, in the last 5 years more than his contracting business. So he's like, hey, you know what? There was a Rich Dad Poor Dad seminar on, so we went out that together and we took the next courses, and we ended up investing. He had funded it at the time. It was $50,000, and we started taking courses and networking. And I can tell you that those rooms and those lessons that we started learning, I thought $50,000. I'm like, this is an incredible amount of money to spend. Um,
Yeah.
but everything that we learned in those courses, we started actually applying, and it paid off dividends very easily for that capital.
Yeah, you know, and it's we had a meeting with our team this morning, and it's contextual, because when you start out, even spending $20 on a book, you're just like, $20. I just, Google it or whatever, right? And then, okay, $1,000, and then $10,000, and maybe eventually get to a point where you're spending, multiple tens of thousands of dollars or $100,000 on your education. And I look at it from the perspective of what would it cost me not to spend that money, whether it's that first $20, that $100, that $1,000, that 10,000. And similar to yourself, you always kind of do a cost analysis where you're like, okay, if I spend X at a minimum, what can I get out of this? And when you start to look at it that way, it really does change your perspective from that initial, maybe for you it was $50,000, and for everyone else, it's you just become a different person as you do go through that. Also, did you find the people that you started to meet as the price tags went up increase the quality of the contacts as well?
100%. You know, you talked about a change. You hinted about a change in perspective.
Yeah.
And as I look back on the 15 years of my journey and where I am and where we're pushing forward, your perspective on the amounts of capital you're dealing with,
Mm,
the perspective on the amounts of investment you're making change. And one of the biggest shift, in my mentality, and it's interesting, like my mom was a part-time school teacher, and my
mm,
dad, started at Stelco Steel in Hamilton from 18 and retired.
mm,
So my family and what was passed on to me was a very different mentality of money, like, work, get a good job, save, that sort of mentality. So looking at money and understanding it as a tool and knowing, okay, yes, you're going to spend this, but this is the return. So shifting your perspective in those rooms and starting to level up, it was about, okay, how much capital can we make? What is the opportunity? And looking at it as an investment and leverage was total different mindset and transformation for me. And so then it's analyzing and looking at education and looking at deals and saying, okay, yes, we got to spend this, but this is what we can make. And I'll never forget a creative financing course that I took, that completely changed the game for me in real estate. I started learning about, self-directing RSPs,
mm,
private lending, and being able to stack and leverage deals, because I came in with like zero net worth, and zero
right.
my own capital. And so learning these strategies, I went from, being able to do, one, two deals a year to be able to doing 10, 12, etc., because we were able to use leveraging and creative strategies that I never knew. So that 50,000 investment, opened up millions of opportunity, and
Yeah.
I think that's an important thing. We research, we do our due diligence and understand, it's what can we learn? What concepts can we learn? What people do we meet? You talked about that as well. It was the lessons learned from others that have done the game much longer, but it was also then the people, because I talked about that perspective I had from my parents. I needed to hang around individuals that had experience and had different um, mindset. We have a core value that's part of our team now, right? And it's called positive problem solvers. And so,
Yeah.
as you know, as an entrepreneur and a business operator, I mean, part of our role as leaders is solving problems, right? That's a big core of our business. I have a joke with some of my buddies. We wake up and we say, "What problem are we going to solve today?" And so being around people that just like, oh my God, what are we going to do? Instead, it's like,
Right.
okay, analyze the problem, look at it from a positive perspective. Where's the opportunity? How can we learn? How can we use this, to overcome? And, as you level up, the problems become bigger, the price tag becomes higher, and that mindset that, you level up with when you're, meeting with folks and learning in those networks is huge. And the other key thing is I met so many people that invest with me, from those
Mm,
circles, because there's tons of people in some of these networks that maybe they're wanting to do it, but maybe they don't have the time. Maybe you have the money, but they don't have the time. Or, maybe you've done something that they want to do. So they're going to invest with you and then learn with you. And so I have folks that I met in those rooms, 12 years ago, et cetera, that have been investing with me all over the years. You build friendships and relationships, and then when you turn a good investment with them, they're introducing you to friends and family, and it grows and grows, right? All stemming from that original investment. So
yeah. So speaking of investment, investing in yourself, I mean, as we've gotten to know each other here over the last little bit, it's clear to me that you're obviously keen on, it's one of the things I look at the people in my world is the people that really stay are the people that are never stagnant. They're always, and it's kind of ironic, the people that stay are never stagnant, right? They're always looking to progress and grow. So maybe share a little bit the Drew that you were in the context of that first or second transaction that you did, and at what point you were able to figure out what you're good at. And I think you know what I mean by that in terms of, because there's so many aspects to a deal. There's the deal, there's obviously the money side, there's the asset management. Like at what point through your evolution, let's call it that, over the 15 years, did you say to yourself, I'm actually best at this, and this is where I'm going to plant my flag? Like, did you ever have a moment like that, or were you always clear on where you fit?
No, I would definitely was not always clear on where I fit. It was a journey, right? So I went from, doing burrs, doing flips, doing some infill development, became a Terry builder, on-site site super, doing some of the hands-on construction ourselves.
Mm,
Did some rent to own. So I progressed and tried so many different strategies until I was able to hone in on where I am today. And it goes back a few years of where I thought, you know what, this is really my zone. This is my sweet spot of where I need to park and where I need to operate. And so I'll share that with you. Um, it involves a bit of a story as well, because along my path, I've had several different mentors, and the one mentor I'm going to speak about was a guy who was a developer, and we connected on character values, and he really opened my mind and took me under his wing to show me development strategies. And land development has so many different facets and different professionals that you work with. And so he took me under his wing, and actually we were working on a project, and this gentleman was 71 years old. He passed like the day after we were working on a project from a heart attack suddenly. It was, very, very challenging for the family. And at his funeral, his wife actually took me around the shoulder and another gentleman around the shoulder that was one of his best buddies, that was a full-time developer, engineer, and ran a planning firm, and said, Dick has passed away, and now you guys are together. And at that point, I really pressed in and was learning more about development. And this mentor of mine didn't have, a son or daughter that wanted to learn or take over the business, so he really took me, around his arm a bit. And I had just started doing infill development. I had construction experience, and where all this grew to was, I realized that the two greatest strengths that I had was development, the investor raising capital relational
mhm.
piece, and those two together. And I had construction knowledge, but I wasn't the best at managing the construction and making it happen. So we realized stepping out of that and
Mm,
managing GCs in that role,
interesting.
and focusing on the capital raise and focusing on the land development organization, that has really become our sweet spot, and where we're able to accomplish the most of what we want to for our mission and values. And I'll share that with you later. And that's where we've really parked ourselves now.
See, and for anybody listening or watching, I hope you guys get to a point of clarity, a moment of clarity where you finally realize what that thing is for you. For Drew, he immediately lit up when I asked the question, because in his mind he's like, yeah, when I did this. So there's so many people, whether it's in our community or just people I talk to, they have so much potential, but they're spinning their wheels because they think they need to have their hand in every pie, and they need to be involved in all parts of the process, whether it's, the land assembly, the development, the construction, the seeing it through, the financing. I mean, look, you can do all of it, but all you're ever going to do is maybe a deal a year if you're lucky, just because there's so many things. And that's the limitation to scaling. So let's talk about, so you have that realization, you realize what you're great at. What are the first few things you did to start implementing, I guess, that revised, more clear version of your business? And how approximately how long ago was that?
Yeah, good questions. I'm gonna start with one little
Sure.
piece of input, and then I'll transition and answer those questions. So, um, I think for I talked to a lot of people, and I think you're hitting on some of this. If for folks that are listening, that you know which strategy do I start at, and there's so many of them. I think if you heard a bit of my story, and I know everyone's unique and different, but it's starting on one. I think that the key is taking action on one, focusing on the quality of that and learning it through that process. And you probably heard trust the process. And as you go and try and you're actually in the doing of, right? Because we have ideas in our head of what something is like, and we all know when you're actually doing it, it could be
Mhm.
different than what you thought. So I think people need to not be afraid of some trial and error back and forth with different deals, focusing on executing them really well, and then understanding between what you think it is and what it actually is, honing over time what that sweet spot is. Now, you asked me, and I might, ask you again for those questions, but the one I remember right now is, what decisions did you make once you realized that was your spot, right?
Yeah, how did like so when you had your aha moment or maybe a series of moments, what did you need to adjust or change or implement to reinforce the thoughts as opposed to just leaving that in the back of your head? Like, did you have to make any drastic changes? Did you have to do more of something, less of something? Like, how did you go through actually executing that thought process?
Yeah, so it was, it wasn't like an immediate aha for me because I had
Right.
multiple projects running, which, as we
Mm,
know in real estate, take, sometimes a year or two to finish. So it was repetition of understanding and having my deals play out, and that the strengthening of clarity, if that makes sense. It was more of a process for me than a like immediate bing. It was like, this makes sense, and I think as you get success, what happens is so many deals start to come to you. Marcin, I'm sure you experience this. People are bringing you deals and pitching you deals, and it's what you want. You want a pipeline where you're getting tons of deals, but the biggest thing for me was, as a optimist and someone looking at deals and filtering through them, it was learning to understand that I needed to say no more and more in my life. So I
yeah,
needed to say no to deals that came in that were okay but weren't the best ones. It was saying no to, things, competing for my time. That was one of the biggest things. It was like, no. And then what it's developed into actually now is we literally have a filter. Okay. And
mm,
it's not just me analyzing the deals anymore. I have a team. And so it's greater accountability to stay clear on our vision and know what deals are yes and what deals are no. And we actually have two filters. We have an economic filter, and B, we have what's called the social return or the social good filter.
mm,
And we also have now a capacity filter. So
mm,
we've honed the aha that's grown is saying, we know we perform best in these key areas. And so
yeah,
when we're vetting deals, we take a very long, I don't say a very long time, we take a very precise and serious time spent on due diligence. And we
right,
literally have check boxes and a score that we do that says this is a yes and this is a no, because it has to hit that sweet spot
yeah.
for our mission and values, but also where we're best. Does that make sense? I don't know if you want to kick that out a
Oh, it
bit
make it
more.
make it makes a ton of sense, and you can often tell where somebody is in their cycle on the business side, where depending on their propensity to say yes or no. So case in point, if somebody's brand new to entrepreneurship or business, they don't know how to say yes. They don't know how to say yes to any opportunity, right? They just say no as a default mode. No, don't understand. And no is the default, right? Then when you start to see some success, you start to say yes, and then you start to say then you start to say yes to more things because, well, this thing works, so I'm going to say yes to this, and then you start saying yes, 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 and then you get to a point where you're, whether it's 3 years or X amount of years, 5, 10 years into the business, and you finally go, hey, like, can't do all of this, and then you start to
Yeah,
say that. Then the first time you're just like, well, no, like almost apologetically, and then eventually you just get
that's right.
really comfortable saying no, right? And
Yep.
and and it's so good to hear you say that, because anybody who's, whether you're an 8-figure, 9-figure entrepreneur, when you get to a certain point eventually, The power of no is like your time is like you only have so many time units in a day or in a week, and I'm sure you'd rather spend time with your girls, you'd rather spend time working on your cause than trying to work what you know is a fruitless endeavor or it doesn't align with your social your you know the filters that you have for and then you start to establish guardrails and things like this and so that is a really interesting evolution because, like I said, you go from no to yes to everything, and then you almost feel guilty for no. So then, how do you avoid the guilt of no? Is you put in your standards, and every time you want to add another zero to your net worth, I find that by adding standards, it actually starts to reflect the type of person that you want to become because you start to create those natural barriers of entry is the wrong terminology, but you know what I mean. Like you start to
Yeah,
the standards become very clear, and if people don't meet
like
those
boundaries.
standards,
Yeah, yeah.
boundaries is probably the best way to put it. Yeah. So okay, so this perfect transition point. So you go from your first transactions, you say yes to a lot of things, you figure out what works, you figure out what doesn't work, you get rewarded for some of it, you learn a few lessons, and then today we're on a call. You've got a bike hanging in the background. It's got Elevate Living there. I see it's an e-bike. Let's fast forward to today. And what is Elevate Living? How did, yeah, just paint us that picture.
Sounds good. Where are we at, and why is that bike hanging behind me on the wall?
Yeah, love it.
Awesome. So fast forward today, Elevate Living is the development company, and Elevate Living is, we have a saying which is better developments, valued relationships. And so better developments doesn't mean we're better than everybody. It means we're evolving and constantly becoming better. And we have key elements in our development of what makes an Elevate Living signature community. And I'm going to go over it because it has to do with the bike. And valued relationships probably is pretty straightforward. It means that, everything that we've built in our business is about good relationships with people, right? Relational equity. It's building time and time again a provenness with our investors. It's about our valued relationships. We're in Niagara. That's where we do all our deals. We have long term relationships and a reputation in the community with the local planners and engineers and the building inspectors and the community groups. And because of my background, we have relationships with the nonprofits and the social services. And today I the Niagara Region Housing Board as well, and I've inputted on the Homeless Housing and Action Plan. So we're connected with different levels of government, part of the Home Builders Association. Anyways, so that's the valued relationships piece, right? Which is such a core part of our business. Um, and so our goal and our vision right now is really two key things, and that's delivering to our investors a good economic return and
Mm,
delivering to our investors and our community a good social return. And so, how do we do that at Elevate Living? We do developments in Niagara, and in our developments, the key core, elements of our signature communities are more housing, right? We're in a housing crisis in Ontario. We need more units. Just supply is so important. But it's
mhm,
not only just a supply issue because building more, $1.2 million houses, which we have a bunch of, it's not just a supply issue, it's also a affordability issue, and it's a what form of house issue. So we bring multiple housing forms in all of our developments. What does that mean? That means, semis, stack towns. We do have singles, condos, rentals, etc. And a part of all our developments have some attainable housing and some affordable housing. The other key thing that we do is we have walkable communities. It's very
mm,
important for us, because we know that's for health. We develop our design so there's some intention of social interaction, promoting local business, multimodal transportation. So the bike on my wall is a key thing that we're doing in our developments and our multi-unit builds, which is electric bike shares, electric scooter shares, and Tesla 3 car shares because it reduces carbon emission, but it's also an alternative form of transportation that's more affordable for individuals. So it leads me to the other piece, which is carbon emission reduction strategies and all that we do. So we look at how can we reduce car trips by walkability, by the multimodal forms of transportation. We're doing energy efficient builds. We became a net zero builder this year. So it ties in as well within our developments. We're always developing a portion of them for multi-unit buildings, and our target is to hit around the 100-unit, 6-story range. And
Mm,
within those buildings, right now, we're using the MLI Select program. And so
mhm.
we do 25% energy efficiency above national building code, and we do a minimum of 10% affordable. We try to press that number when we can. And it does two good things. It does a good social return, but at the same time, we're getting financing linked to bond rates, and we're getting higher amortization and loan to value, which actually the numbers are working right now. So say we have, one deal that's active in construction, we have 4%, on that loan instead of, typically prime plus, 1.5. Um, so to bring that back, elevate living right now, again, the core things are good financial return for our investors, good social return. And you can sort of see, how, the different steps of my life journey have sort of melded in, to what we're doing today. And just this year, what we did is we opened the Elevate Living Real Estate Investment Trust Fund. And that was a huge step for where we're going and what's next for Elevate Living.
Mm. There's a lot to unpack there. And we've got a few minutes to do it, so let's get into it. So the social, and the environmental piece that you talk about, I mean, your customer, your end customer, the people that are either renting or buying these units, I mean, they're more and more conscious of those environmental issues, and that's becoming more and more important to them. Also, I appreciate you mentioning the attainable housing and the affordable housing component, and I think partly with your ability to kind of weave in attractive financing by providing some of those options and kind of just tying all that in together. I think what you're really doing is helping solve part of the issue with the housing issue. I mean, it's, growing up in the GTA for 20 plus years, you see the cost of housing is just it has gone through the roof, right? And knowing that you're able to do that, have you guys, a question for you, have you guys pulled any stats or any statistics on some of the economic benefits to the community by employing people and being able to add just the demand in the community? Like, do you have any facts or figures around some of those things?
Oh, good question. Yeah, that's another key piece. So I don't have exact stats or figures, but we've looked at that as well. So, some of the conversation um, we have as well is the amount of dollars and the jobs created from developments is huge.
Yeah,
So there's
exactly.
the planners, the engineering work, there is all the construction workers. And then, for example, like one of our key developments right now, we have 1,200 units on a mall redevelopment. Actually, where I am right now is my office in the Seaway Mall in Welland, and we severed 15 acres off the north west parking lot. And so that, like, when we move in all those folks, it's going to give a resurgent to the mall for all the customers, right? So I can't quantify what that exact benefit is, but we know, there's going to be a shot to the local economy there. There's the amount of development charges that we pay that go to build the infrastructure of the city.
Yeah.
And a key fact is one of the things we do, we often do infill development. So this mall development, we're connecting to existing infrastructure, so there's no cost to upgrade infrastructure because in this case, the capacity happens to be there, but the amount of tax dollars generated, we do measure that. So we look and we say, okay, this development is going to increase revenue of taxes to the city by X amount of dollars a year. So we do measure that as part of the analysis of each of our developments as well, because you're probably, everybody's probably reading in the news, right? Councils struggling about these budget, no one wants their taxes to go up, but costs have gone up. And so we're having to increase that, and I think people need to realize, that new development, we need it for housing, but the other great thing that it does is it provides important funding to our local municipality that helps maintain our infrastructure, but also maintain the taxes that each and you I pay, on our houses as well. So
Yeah.
we quantify that. DC charges. There's often community benefits, right? Like there's 500,000 going to the city of Welland as community benefit, things like that, right? So
What would be a really interesting statistic is, as you progress, I mean, you guys have, built out value over well over 100 million now. It'd be interesting if over the next little bit, you guys were able to, whether it's your team or whatever, actually assess what the actual economic impact that's had, whether at a municipal level or at a province-wide level, or even at a local within three kilometers of the property. Because I think those are the stories that are kind of the unsung heroes in the real estate business. Is, you drive by a new build and you're like, oh, cool, 100 condos are going up. Well, no, it's not just 100 condos. It
yes,
is a tax base. It is a rationale to hire more teachers for the community. It's a rationale to hire more police officers, firefighters, nurses, hospitals. There is an entire storefronts, the laundromats, the dry cleaners, the convenience stores, the gas stations, the gym memberships, all of this stuff. Like it all drives the economy. And that's why real estate is such a, I mean, everybody inherently understands the value of real estate, but I think as an industry, we could do a better job of speaking to the macroeconomic impact that our projects leave in a community. And that sounds like something you guys are obviously very focused on. And so how are you guys moving forward now? Are you guys working on multiple projects? Like what's happening in your world today?
yeah. So our target is development lands from 5 to 20 acres in size, and including a multi-unit in all of our projects. So we have multiple projects going on right now. We have just under 2,000 units in the pipeline at different stages. So the mall project we're about to service. And then there's two apartment buildings. One is a 129 unit that will occupy in April. I have an 84 unit that will finish in about August. I got partners on that one. We have a 28 unit in St. Catharines that's 65% complete. And then I have multiple other land holdings that are going through the entitlement phase. So right now our focus is moving through those lands to the next step. And our
Mm,
key focus really is the fund right now. And so it's raising capital in the fund, and we have a lot of the lands we've purchased in around the 2019 area that we've been moving through, or we've moved through entitlement stage. And so it's moving through and building some of that out. So the purpose-built rentals, we're constructing those. And because the market is down on like the singles and towns, where you're selling that to other builders, or when the market turns, we'll go to construction on some of that stuff as well.
So for people that want to learn more about yourself and your fund, what's the best way for them to get in touch, to learn more? How should they do that?
Yeah, you know what? The best thing to do is go to our website at Elevate Living REIT, REIT.ca. Put your name and email in there. We'll reach out. We have bi-weekly webinars that we're doing throughout next year. And we have once a month in-person event here at the office, where we'll meet with people. We'll actually tour some of the sites that we got going on, get to know you in person if people prefer that, and share about the fund. We'd love to hear from people. It's We have a really exciting offering, very good forecasted return, and we have a prep and strict due diligence measures for security for investors as well.
Excellent. Guys, I will share this with you. I've been at this for almost 20 years now, and what I can tell you is I've seen a lot of good deals and I've seen deals that didn't work out. And the common thread behind the ones that worked out, even if not according to plan, but maybe exceeded or at the very minimum, worked their way through, was management's rationale behind why they're doing what they're doing. And if it's just a monetary pursuit of, hey, we can buy this for X and sell it for Y, well, that's great when things are going well. But when things, have challenges, it's typically management that has a vested personal and even emotional connection to why they do what they do that typically outperform other people, because ultimately you're investing in people. So if you want to learn more about Drew and his team, obviously reach out to them, learn more. Drew, it's been great getting to know you. I obviously really appreciate you sharing your story. It's always fun to me to talk to someone who, read the book 15 or 20 years ago, whatever that book was, and then just said, you know what, I'm doing it, and worked their way through it. So congratulations, sir.